Welcome back. You're watching Business Morning on Channels Television. We'll be reviewing the economy in terms of the nation's business environment in 2014. And I've been having a conversation with the Director of Research and Advocacy of the Lagos Chamber of Commerce and Industry, Mr. Vincent Nwani. He's still here with me in the studio. Thank you so much, Mr. Nwani, for sticking around.
Thank you again.
So we've been talking 2014. Now let's look at 2015. It's a very interesting year. In fact, the first half of this year is more than interesting, because we're coming from last year into this year with the issue of devaluation of the Naira, falling crude oil prices, and then we have elections in less than how many weeks away?
About 6 weeks.
So what's the outlook for the financial markets?
I think we have to anchor a lot of things now on the future of oil price, which we can't control. Abuja cannot control the oil price. This morning we heard that oil price is now about 6 years low at less than $56 per barrel. That's not a good news. Unfortunately, we saw this coming over the last 2 years, and we've been talking about how to diversify the economy. So the implication of that is that if oil price, crude oil price keep on falling as it's falling. This morning we were listening to a program, what is already happening in the stock market, not just Nigerian stock exchange market, but global stock and equity market. People are already taking a flight to safety. In places like China, you see people going buying durable goods such as houses and buying expensive cars and all of those. The implication of the falling crude oil prices, especially on the stock market, is that there will be a continuous flight to safety. Because the more Nigeria earns less FS from crude oil, which is a mainstay, about 80% of our foreign earnings is derived from crude oil sales. The implication of that is that there is going to be exchange rate devaluation. And some of these foreign portfolio investors, exactly, some of these foreign portfolio investors that are still in the market, some of them are already out already, but some of them that are still in the market will still have to leave. Because the exchange rate depreciation will always impact on them. And not just, you know, when we talk about financial markets, it's not just the capital markets. The banks, the insurance, the PFAs, and even the stockbrokers themselves and the advisors, everybody will pay a certain price for what is going on right now. You look at bank. The more government or central bank come with response to say, okay, private sector deposit, you know, the CRR on private sector deposit, you know, keep on jacking. Right now it's 20%, maybe it will go to 30% in response to all of this. And even public sector fund may be 100% at some point. You find out that the profit of bank will likely reduce from what it used to be. And this situation will likely trickle down to even pension, to even insurance. But the good news is that these are smart operators. They find a way to also see how they can key into some of these problems. And for example, the insurance, I think the insurance should be able to build a capacity on hedging for volatility at this time. These are opportunities. But doing that, they need to build capacity. How fast and how much you can build capacity quickly to respond to some of these hybrid risk that they have to undertake in the insurance industry remains to be seen.
Quickly comment on this if you can. This tweet from Salter Swan says, we experienced stable inflation in 2014. Why didn't we experience stable prices of goods and services?
In 2014.
2014.
Stable prices of goods and services. Of course, inflation is just a measure of the prices of goods and services on the aggregate. So it depends on where the person is coming from. It may be that he's just dealing on consumer goods or he's dealing on fashion goods. You know, but inflation is an aggregate of both transportation, energy, fast-moving consumer goods, domestic. So it's an aggregate of the whole goods and services, the price of goods and services in the economy. So it will not be very correct to hear that prices of goods and services was high in 2014, while inflation was low. No, inflation is an aggregate of everything. So it depends on the type of goods or services that this caller is talking about.
Okay, so let's talk about the exchange rate now. What's LCCI's outlook for the exchange rate? What will be the major drivers?
The major driver of exchange rate is still the oil price. You know, whenever we sell oil for a layman, whenever we sell crude oil, Nigeria, the consideration is dollar. We are now saying that the amount we're going to be deriving from this dollar as of today is now 50% lower than what we were deriving as of June last year, when the price of crude oil was $115 per barrel. Now, if a major source of your income as a human being has reduced to by 50%, what will happen to your ability to buy new clothes, to feed your children? You know, this is like breaking down the situation to the lowest denominator. So the outlook for exchange rate is that likely more exchange rate depreciation when the MPC meet in their next session. Likely, of course, it is already staring on everybody's face. Right now, we are seeing the highest gap between the official and the parallel market. The widest I have known in my professional life. Right now, it's about 28 naira per dollar. The gap between the official exchange rate and the parallel market, and this is creating a lot of arbitrage opportunity, a lot of shadow markets. You know, very few people are clearing out, but then it's a major concern. But like you asked, what is the future? What is the outlook for exchange rate depreciation? And that is a bad news for a lot of investors, especially portfolio investors, foreign investors that invest in our bond and in our TBs. But more importantly now for industry, who we represent, is that the manufacturers that majorly depend on foreign inputs, other machinery, raw materials, will likely pay a huge price because it will trickle down on their cost of production.
But this wouldn't necessarily affect the non-oil sector.
It will. The non-oil sector, the manufacturing sector, for example, I'm saying that for manufacturers that source most of their raw materials from abroad, will pay with dollar. And now the cost of dollar, the dollar price is now very high. We're looking at something more than $200, 200 naira per dollar at some point.
At some point.
So it is going to impact on their prices. And remember right now that some of these state governments, because when we are talking about it, we should look at it that it's not only in Abuja, it's not only federal government. Some state governments in this country are owing 2 months' salary, 3 months' salary. Some of these states, the major driver of the economy is the civil servants that have to earn salary to go and patronize the market women. Through that, you see that this money trickles. And if civil servants in X state, I don't want to mention any state, is owed 2 months' salary, what is his purchasing power to pay for goods and services in the market? Which we think that the price of those goods are now going to increase due to the exchange rate induced cost through input prices, especially. So it's a mixed reaction, but there are good news.
Yes, the good news. I hope the good news is going to be that we're going to see non-oil exports increase.
There are good news, a lot of good news, because we can't just be seeing bad. No. I think one of the things this situation have done for, because right now we don't even know the bottom out price of crude oil. Places like Saudi Arabia are already forecasting, already planning the economy that at the worst they can deal with it at $20 per barrel.
Yes.
What is our own agenda? But assuming the price keep on falling, which we don't know the bottom, the implication one is that Nigeria will quickly move from word of mouth to action. Nigeria beyond oil. We really want to see it happen. We have to look elsewhere, non-oil. Beyond that, the 1 trillion naira or more than 1 trillion naira we've been spending on subsidy for fuel alone will have to disappear. Right now, the pump price of 97 naira is even higher than the landing price. So everybody is looking at a lower pump price of crude oil and of fuel, and even kerosene. $90 billion naira is projected in the budget for subsidy on kerosene. That very subsidy have to disappear in the current realities. So these are receipts from the system already. And beyond that, we also find out that CBN will likely make more money.
Yes, because that was actually highlighted, that the benefits of an increased surplus from CBN forex sales. Could you just shed more light on that? Because I don't understand how we expect to see, well, we actually see more forex sales, yes, but how will it benefit the economy?
What the report is just trying to say is that before now, CBN was selling FX at 55 155 naira per dollar. Now they're selling at a far higher price, you know. So CBN is going to earn more naira to finance some of this, to make some of this domestic spending possible. But then that is not the huge gain here. One of the gains is that the issue about fuel subsidy will likely see a situation. I read a report this morning in the newspaper that at least fuel subsidy have reduced by 90 kobo per liter. Nigerians want to see something better than that. It's going to be better than that. And remember that most of these producers, especially manufacturers, depend on diesel. By the time the price of diesel, pump price of diesel reduces, that also trickles down to the cost of production. So it's not just on the negative side only. We think that the current situation we find ourselves with the dwindling fortune of oil revenue will likely lead Nigeria to do something else in a more credible and action manner. And some of these flight to safety will also ensure that Nigeria is able to have a more sustained economy, even post, because this oil price will not continue to move to the south. No, by the time the oil price stabilizes, then non-oil sector may have taken off. But then, in the light of the action we are going to take right now.
Let's look at the fact that everybody wants the pump price of fuel to come down.
Yeah.
But then the price of the landing cost hasn't come down. Yeah. It's still very high.
Who says it hasn't come down? Who says it hasn't come down? Two things are playing now. Remember that crude oil is the raw material for fuel and kerosene. For example, the price is now lower by 50%. So the lifting price by the importers have reduced by 50%. The only downside is that they have to pay with dollar, and the dollar price, both the official and parallel and even interbank, have also jacked up. But by the time you net out the reduction in the crude oil prices with the exchange rate, increases in exchange rate, you find out that plus and minus, they are buying it lower than what it is before. Remember that in some countries like USA, at the peak last year, June, the gas price is $3.45 per gallon. Right now, they are buying it about 40% lower than what it is before. Saudi Arabia, the same thing. Venezuela, this is our oil-producing country, the same thing. We think that Nigeria should follow suit, and that is one of the gains from the current realities.
Okay, now, so another thing that we're expecting to see, that we know that the federal government has really spoken so much about, is increase in tax drive. So many agencies of government will be more aggressive in this aspect. Any implications for businesses?
There are already implications. You know, new targets have been given to revenue-generating agencies of government, such as customs, such as Federal Inland Revenue Service, even state governments, not just federal agencies. The implication of that, I said at the beginning of this program, that last year alone, the import duties paid by our members was jacked up by 100%. Beyond jacking it up because of the pre-arrival assessment program that was introduced, also delays. You see them paying a lot of demurrage, because by the time you say that this is the invoice price of your goods, the tendency of customs and the officials to jack it up or give you another invoice to go and is there. We keep on receiving complaints from everywhere.
And that might increase this year.
Exactly, and that might increase this year. Yesterday, we got a letter from Customs responding to some of our protests and complaints on this same matter about arbitrarily increasing the price, import prices for our members. So it's likely going to happen. But what we keep on doing at the level of LCCI is engagement, because it's a win-win situation. If you kill the remaining few businesses, where is the tax revenue? Where is the job? Where is so it's like you said, it's a win-win situation.
It has to be.
It has to be a win-win situation, and beyond that, at the state level too, the states have to augment for the shortfall in the federal allocation. So not just the federal government agencies, the NAFDAC of this world, the SON, the Custom, the Corporate Affairs Commission, state agencies are even going to be wired, even at the local government level.
Mr. Nwani, from this conversation this morning, it looks as if 2015 will be either a make or break year for Nigeria.
And we pray that it's going to be a make year because we don't have any other place to go.
Well, thank you so much, Mr. Nwani, for sharing your thoughts with us this morning on the program. Well, I've been speaking with the Director of Research and Advocacy of the Lagos Chamber of Commerce and Industry, Mr. Vincent Nwani, and we'll be reviewing the economy in 2014 with particular emphasis on the nation's business environment. And as he said rightly, it has to be a make year for Nigeria. But that's the program for today. But let's quickly tell you that the Naira is trading at 180 Naira to the dollar at the interbank forex market. So this should be relative good news because as yesterday the Naira was hovering between 188 and 119 Naira at the parallel market. But of course, it's still early days yet. We hope to see this number reduced by the end of the day. It should come down, but a lot of market analysts are not very confident of that. They're expecting that because of speculative trading, it might go higher. But the Central Bank of Nigeria is trying all it can to ensure that the Naira stays stable. But that's the program for today. Thank you so much for being a part of it, and thank you also for sending in your tweets. I'm Harriet Agbini.